Welcome to the Universal Accounting Center's Advancing Your Accountability with your accounting instructor, Alan Bostrom. In Session 5, the 13th month, you'll understand why a 13th month is necessary in accounting. You'll make year-end adjustments, then close out the earnings accounts. Now, here's Alan.
Chapter 4 deals with year-end closing, which is a special process that happens after the December month is done. That actually creates a 13th month. Now, as far as I know, the only profession that has 13 months in the year is accounting. And that 13th month might be 5 minutes, or it might be 5 days, or it might be 5 weeks, okay? It just depends upon how long it takes you to close what we call close the books. Now, what we want to do is go through that process today for you so that you understand the closing process and you can replicate it again in a business. And every business has a year-end closing. Now, to establish, first of all, what is a year-end closing or when does it occur, we have to understand that there are two types of years for businesses. The most common and the preferred one is called the calendar year. And the calendar year is, by definition, January 1st through December 31st. Most businesses are the calendar year for good reason. And that's probably the preferred method today. There used to be some tax advantages to going to the alternative fiscal year, but those really don't exist today like they used to. Now, the other one then again is fiscal year. And fiscal years are anything but a calendar year. And they usually start at the beginning of a month and end on the 12 months later. And it would be something like February 1st to January 31st or July 1st through June 30th. Most companies should only choose a fiscal year if they have a specific reason for it. One of the misunderstandings and the wrong reasons to create a fiscal year is if you start a business on any date other than January 1st. There's some misunderstanding by business owners out there that the first year has to be 12 months long. So if they start on April 1st, they're automatically fiscal year. That is not true. That is not the case. You can start a business on December 1st and still be a calendar year. It's just that that first year is only 1 month long. Okay, it's called a short year. So that doesn't play into it. What does play into it is what's called a natural business year. And some businesses have a natural business year that does not coincide with the calendar year, okay? And let me show you what I mean by that. When I say a natural business year, I mean that their sales escalate at some point in the year and create a dome and then come back down, okay? Now, if that natural business year begins around January 1st and ends on December 31st, there is no question. A calendar year is the way to go, okay? Or if the business doesn't have a natural, if business is pretty consistent throughout the year, then their natural business year really doesn't matter, okay? However, for some businesses, this natural business year might begin on July 1st and end June 30th. Can you think of any businesses that do that? The ski resorts. The ski industry. Okay? Their natural, when is this? November through January, isn't it? Okay? And so that's when most businesses are closing their year. Now, what it means to close a year in is we turn the score, the net income, back to zero and start a new year. If we were to do that here in the ski industry, the same ski season would fall into 2 financial years. We don't want it to do that. We want the season to all be in one reporting period. So this season might be 2001 to 2002, but it's all in their books 1 year. Okay? So the ski industry is a good example. The snow ski industry is a good example of a business that would definitely have good reason, and probably all are, on a fiscal year. Now, Steve, you mentioned retail. What happens in retail? Christmas, okay? And is all the dust settled, and are they ready to sit back, kick back on January 1st? No. Okay? So in fact, their natural business year is really skewed. It's more like this right here is what their natural business year is. Okay? And so you have, and really, you know what most retailers use is they use February 1st through January 31st. Okay? Why? Because it takes a month to settle things down after Christmas. February is their slowest month of the whole year, traditionally in retail. So that's a good time to shut things off at that point. So Toys R Us, Mervyn's, Kmart, Walmart, all those businesses, this is their natural business year right here. Okay? Now, for purposes of discussion today, we're going to assume the company that we're going to be working with in Chapter 4 is on a calendar year. Most companies are. And again, unless you've got a good reason otherwise, stick with the calendar year. And this is the best reason right here. Someone mentioned government, okay? State and federal government are also on a fiscal year basis. The federal government ends their year on October 31st, if I remember right, or excuse me, September 30th, and the state government typically ends it on June 30th, okay? Now, what happens then is some businesses rely on funding from the government for operation. And if they do that, their year is probably going to coincide with whatever government agency they rely on. So they can be funded at the beginning of their fiscal year. So if it's a state operation, they're going to probably follow the state fiscal year if they rely on the state government for funding. Okay?